In this presentation, we will enter a practice problem into Excel that will be tracking this information through a work in process account. Again, this is a QuickBooks course, but our first step is to put this information into Excel because it's going to be a very transparent format to see the information. Once we have it there, then we can go to QuickBooks and better identify what our objectives are and the tools that will be used in order to achieve that objective. Here is our Excel worksheet. We're currently in the Practice tab. The Completed tab is in the Example tab. We're going to be on the Practice tab. You do have access to this Excel sheet and you can follow along as we go. However, we are going to go fairly quick here because our main objective is just to show what we need to do within the job cost system so that we can then apply it to QuickBooks and look at the tools within it. We will be working this problem again in a step-by-step process as we go through these items within QuickBooks, comparing and contrasting as we go. We want to give the overall objective at this point. So again, please don't feel obligated to fill this out right now or be too overwhelmed as we enter this Excel worksheet. I know this is a lot of information at the start. We just want to identify those points that we're going to be looking at within QuickBooks. We will do this again in a much more slower step-by-step process as we go through the one step at a time. We want to see the overarching objectives, all the objectives now though, so we'll work through the entire problem here. Here is the information on the left. We're going to enter that into the blue area here. Then we're going to post our journal entries. And we're going to do this with journal entries. Now we're going to see the actual journal entries, which are the actual building blocks. When we go to QuickBooks, we don't really see the journal entries, but the forms we use do create journal entries, and that's what we want to be able to tie out into QuickBooks. Then we'll post those journal entries to our trial balance. Our trial balance has a list of accounts. The green accounts are going to be the assets, orange the liabilities, the blue the capital or equity accounts, and then the revenue and expense accounts, the income or profit and loss accounts at the bottom. We got the debits as positive numbers, the credits as negative numbers, and therefore the debits minus the credits equals 0. If you're not used to debits and credits, that's okay because we'll go through this with a debit and credit format, and then when we go to QuickBooks, you won't see the debits and credits as much because we're going to be using forms, but you'll be able to know which accounts are going to be going up and down as we go and what the major objectives are when you go into QuickBooks. And then we're going to have our job sheet over here. So now we have our job sheet. As we go through this, we'll be tracking this information through the work in process account. The job cost sheets then need to support the work in process account. That's going to be one of our major objectives. So every time we enter something into work in process, we're going to make sure that it ties out then to the job cost sheet. So that's going to be one of our major objectives we have here. Job 14, job 15, and job 16. Job 14 and 15 have information in it from a prior time period. So we're going to say we're starting in January. Back last year, we had data that was in there that's currently in there as of 1/1 now, the current period we will be working on, including the 3 items, and we can group items into our jobs in the most generic type of term, which is going to be the direct materials, the direct labor, and the factory overhead. So most of the time, whatever you're working on, whatever you have a job cost system for, if it's contracting or something like that, or even if it's just bookkeeping or service orientation, if it's a service, you might not have direct materials, but you still have the direct labor and the factory overhead. If you have inventory of some kind, then you've got the direct labor, the direct materials, and factory overhead. So we'll discuss these more in depth as we go. If we add those up then, for job 14, we currently have 41,000. Job 15, we have 8,000. And job 15, we have 42,000. And those two add up to the 83,000, which ties out to what's on the general ledger account. That reconciliation is what we need to do as we go through. It's a similar reconciliation that you're probably familiar with an accounts receivable account, where we have to reconcile not only to the general ledger account, but to a subsidiary account that breaks out that information by customer. Same kind of idea here. We have to break out this information in the work in process by job, which is a bit more detailed because within each job, we've got a lot of data in each job. Okay, so I'm just going to go through these transactions and we're just going to record these out as we go. We're going to say the first one's going to be on 1/1. We're going to purchase the raw materials on account. So what's going to happen then is the materials are going to go up. I'm going to call them raw materials. We're going to be tracking them this time as an asset type of account. In other words, we're not applying them directly to the job. You may have a system where you do apply it directly to the job, and we'll talk about that later, but right now, we're going to put it into the asset account. We're buying whatever the raw materials are. If we're making something like a contracting job, it will be wood and whatnot that we're going to put into the raw materials. And then the other side is going to go to accounts payable because we have not yet paid it yet. So it's going to be some kind of liability account. The amount is going to be for the $400,000. That's the debit and the credit. Again, I know I'm doing this fast, but we'll see this again as we work through the problem. So if we post this, what's going to happen in terms of our accounts? The raw material is going to go up. So the raw material increases and the accounts payable will increase. So we're going to increase the accounts payable. What happens to the job? Nothing yet, because all we did was put the raw material into our warehouse. We haven't yet put it to a job. We haven't assigned it yet. So once we assign it, then we'll have to deal with the job as it goes into the work in process account. Next item we're going to say that direct materials transferred from raw materials to the job. So now we're going to say that we're going to take this stuff out of raw materials and transfer it to the job. The jobs will be 14, 15, and 16, adding up the 100,000, the 170, and the 80,000. In terms of a journal entry, we can do this with one journal entry. That journal entry is going to be that it's going to go into the work in process. It's going to come out of the raw materials inventory. And that's going to be for the amount equal to 100,000 plus 170,000 plus 80,000. That's the debit and credit format. So to record this on the general ledger, it's pretty easy. All we do is we're going to put we're going to increase the work in process. So in N7, I'm going to increase the work in process with the debit. And then the raw materials are going to go down. So in N6, I'm going to say F2 to go into it because there's something in it, plus F2. And then we're going to decrease the raw materials. So all we did was transfer it from raw materials to work in process. But now we hit work in process. Therefore, we have to do something to the jobs as well. So what we have to do to the jobs is apply this out to the jobs, which is 100, 170, and 80 for job 14, 15, and 16. So for job 14, it was 100,000 under the materials. Job 15, it was 170, I believe. 170,000. And then job 16 was 80. So job 16, we're going to say was 80,000. And these three then, if I add them up, I'm holding down control to hit both of all those, add up to 350,000. So, and then if I check my total jobs for all the jobs, there's all the jobs so far, all the open jobs, that ties out to what's on the trial balance. So that's our goal. This is kind of like a subsidiary ledger that needs to tie out. Notice how much work it took for us to do that. I had to actually enter the transaction here, then enter all the items that apply to the particular job, and then check and make sure that we're back in balance. And not only that, but we don't have a lot of detail. I didn't break it out between the types of materials. I didn't say, hey, this is what we bought. We bought wood, we bought this, we bought stucco, whatever. We bought a bunch of stuff. We just put it into direct materials. So we could imagine a more detailed job cost sheet, which we'll think about once we go to the QuickBooks file as well. We also want to note once we go to the QuickBooks file, we would like to make that transaction done with one entry. I'd like to use some type of mechanism so that when I enter the transaction, it will post both to the general ledger account and to the jobs. Will reconcile automatically, and therefore it will be difficult for us to have a situation where the work in process doesn't tie out to the job, because the mechanism within QuickBooks will basically force us to do it in a similar fashion as it forces us to reconcile the accounts receivable account to the subsidiary ledger for the accounts receivable broken out by customer. So that's what we're hoping for when we get to QuickBooks. So just note, we're going to look for tools that are going to help us to achieve those objectives in QuickBooks. And then on 112, we're going to say that the direct labor paid. So now we're going to pay for the direct labor. Now we're not going to process payroll here, but we're just going to think about if we thought about payroll on the most basic level, or if you were contracting and you contracted out a 1099 contractor, it would be basically, normally the entry would be to debit the payroll expense and credit cash when you pay someone. That would be the most basic type of transaction. Here, we're not going to be debiting the payroll expense, because we didn't use their work in order to generate revenue, we used their work in order to generate the asset that we will later expense in the format of cost of goods sold. Therefore, the debit's going to go to work in process. So we're going to debit work in process for the wages that have been incurred, or the 1099s that we have entered, the contractor workers, or whatever we want to, however we have that system set up. The other side then going to the cash. And that's going to be for the amounts for the 3 jobs, 14, 15, and 16, equal to the 30,000 plus the 68,000 and the 120,000. That's the debit and credit. So notice that you can't really tell what's going on by the journal entries because everything's going into work in process, because we're basically capitalizing the job until we expense it all at the end in the format of cost of goods sold. So you got to kind of note, you want to put notes, and memos are really helpful with a job cost system to help you out with what that detail is. Then if we post this, I'm going to go into the work in process. It's going to go up. This is representing all the jobs that we're working on. I'm going to go into it by saying F2 plus F2, go over that to that 218,000 and enter. The other side is going to be going to cash, which we paid. So I'm in N4 equals the cash, and the cash will be going down. Notice the red means we're out of balance, and when it turns green, it's back in balance. So now the cash is going down. Notice there's no effect on the net income from all these transactions. There really will not be any effect on net income until we make the sale at the end of the job under this method here. So now what we've done is done something to the work in process again. We then need to go to the job. We've affected this account. Therefore, we need to do something to the job cost sheet. So 14, 15, and 16, 30,000, 68,000, and 120,000. So we got 30,000 for job 14, 68,000 for job 15, and then 120,000 for job 16. That's under the direct labor for job 16, job 15, job 14. Adding those up, this plus this plus this adds up to the 218. That's the amount that we posted there. So that's correct, 218. If I add up all the jobs, they now add up to this 651,000, which ties out to what's in the work in process general ledger account. So note the work that we had to do there. We had to enter this into the general ledger account with basically a journal entry, and once again apply that information to the job. Now differentiating here between the direct materials and direct labor, as we did this to the job, note we didn't add a lot of detail. We could add more detail. This is labor for the electrical work, or what this is labor. We could break that out by different items for the direct labor, but we're grouping them together now. So that we want a mechanism within QuickBooks that's going to allow us to enter that information affecting both the general ledger account and the job sheets, and possibly breaking out more detail if we so choose within the QuickBooks system. Okay, let's keep pushing forward. Next one, we're going to apply factory overhead based on predetermined overhead rate. So what we're going to do with overhead, it's going to be all those types of items that we don't know how to apply directly to the job, because we don't want to spend the time to apply something like small materials or something that affects multiple jobs like depreciation. We're going to have to use some type of estimate to apply them to the job. So in other words, I need to know the relative size of the jobs so that I can apply it out to the job. In other words, if I had overhead, how would I apply it to the jobs? I could just take the 3 jobs and divide the overhead by 3. We could do that. However, the jobs are coming and going throughout the whole time period, and sometimes we don't know exactly what's going to be in overhead till the end of the period, and we might be processing the jobs and needing to know the information during the period. So therefore, oftentimes we'll actually apply the overhead rate before we've actually incurred or gotten the bill for the overhead costs. So we'll see what that looks like. That's what we're going to do here. We're going to say, look, I'm going to apply overhead to these jobs based on an estimate. That estimate is based on a predetermined overhead rate of 50% of the direct labor. Now, it doesn't have anything to do with direct labor directly. The direct labor is just being used as an activity base to determine the relative size of one job to another. So I'm not going to get into a lot of detail on how to come up with the activity base here. The main thing I want to get across is we're using some type of estimate to apply out the overhead. which is going to include all the things that go into the job for which we can't apply directly and therefore have to use some type of estimate. So we're going to estimate this amount, or the amount of overhead that we're going to apply to the job, to the cost of the job, before we've actually even incurred the overhead at this point in time. So, and we're going to do that based on the direct labor. So to do that, then, we're going to say that it's going to be 50%, we said, the applied overhead. So what I'm going to do is I'm going to do the job cost sheets first this time. I'm going to say I know what the direct labor is, therefore the overhead is going to be this 30,000 times 50%. Again, why 50% of direct labor? Direct labor is not, involved in the factory overhead. We're just using direct labor to look at the relative size of this job, say, to this job. This job's much bigger. Therefore, if I take 50%, I'm going to charge more to this job than this job. Again, we'll revisit this multiple times when we go through the problems. Then over here, I'm going to take 50% of this. And down here, I'm going to take 50% of the labor once again, times 0.5. And then if I add those three up, the 60, the 34, and the 15, it adds up to 109. So that's what I need to make the journal entry for. Same kind of concept over here. We're going to be taking this on 116. We're going to be putting it into the work in process, and we're going to be taking it out of factory overhead. Now, nothing's currently in factory overhead. We're going to put something in factory overhead in the future as we incur the costs, but many of those costs might not happen till the end of the month. Even though they're happening during the month, we don't record them till the end of the month. So we'll see it go up later as we incur the costs later on in the month. We're going to then put the debit and credit, which is going to be the 109 for the debit and credit. And there we have it. So we'll go to the work in process account then. Once again, work in process is going up. So I'm going to say F2 plus F2. Increase the work in process by the 109. The other side going to the factory overhead. So factory overhead going down. It's now in a negative balance, credit balance. So now we've done something to the work in process account here. We've reflected it in the jobs. The work in process is at 760. The work in process on the jobs is at 760. Once again, we had to do two steps to kind of reconcile those out. Within QuickBooks, we would like to have some mechanism that helps us to reconcile that process as we do the data input with one step. Now, next we're going to go to 120, where it says we have the indirect labor paid. So now we're going to be incurring all the things in overhead, all the things that go into overhead that we had to apply out in some way. Idea being, I couldn't apply these directly to the job. I couldn't then put them to work in process, but rather had to put them into the factory overhead that we then use some kind of estimate, as we did here, to apply out to the jobs. So these are all the things that might increase the overhead account then. So we might have overhead related to the indirect labor. These might be things like people working on the warehouse within the job, or supervisor salaries that supervise multiple areas, or the janitorial service within the warehouse where we work on jobs. We don't know how to assign that work to the particular job. Therefore, we're going to put it into overhead and then use some kind of ratio, some kind of estimate to apply it to the job. So the factory overhead would then increase, and the other side is going to be the indirect labor we're going to pay cash. So there's going to be our transaction for the amount of the 14. That's the debit and the credit. So now within factory overhead, we're going to be increasing factory overhead. It's already been applied out. So as we increase it, it's going to go back towards 0. So I'm going to say F2 plus F2, factory overhead, and then the cash. I'm going to go up to cash, F2 plus F2, and then we have the cash. Now notice what's not happening. Nothing is going to the job right now, and therefore we don't have to support the work in process account. We don't have to do anything special to the job at that point in time. Next, we're going to go to the 130, other things that could increase the factory overhead. So 130, indirect materials, things like grout, small materials, glue, paste, whatever types of things. We're not going to tie that directly to the job. It would be too tedious. We're just going to purchase it and then allocate the cost to the jobs in some format. Therefore, we're going to put this into factory overhead again and use that activity base that allocation, that estimate, that ratio to allocate it out. So we've got the materials, and that was for 30,000 debit and credit. So we're going to go over to the factory overhead once again. Factory overhead, we're in N9. I'm going to go into it with F2 plus F2. Scroll down to that 30,000 and enter. The other side go into cash. So I'm going to go up to cash, F2 plus F2, and I'm going to pick up the 30,000. Again, I'm doing this quick, but we will do this again multiple times in a step-by-step fashion, a slower fashion. We just want to get the overarching idea here. So that's something that would increase the overhead. It's going back towards zero. Another thing that might be involved in the overhead, we're going to say that we have utilities. Utilities on the factory, for example, where we actually make things, should be in the cost of the inventory. So that's something that we might include in overhead and would want to assign to the job in some way. So we're going to say on 130, once again, factory overhead is going to be increasing. So we'll say there's an increase to the factory overhead, and the amount is going to be for the 12,000. And then the other side, once again, go into cash. So this is all kind of the dumping crown. Usually the smaller things here, the big things are going to be the direct materials and the labor, of course. Some of the smaller things, indirect material, indirect labor, and then utilities and whatnot. So we're going to go into the factory overhead once again. Same journal entry, factory overhead, F2 plus F2. This is going to be increasing the factory overhead, which we already allocated out, so we've over allocated at this point because a lot of the actual costs may not happen till the end of the month. And then we have the cash down here. Cash is going to be decreasing cash. So cash goes down, so there we have that. So now I'm going to open up some more cells so we can keep going to column F. So there's hidden cells between F and L. I'm going to put my cursor on E, left click on it, drag over to L, let go, right click on that selected area, and unhide it. So we're going to unhide. Oh, I think I hit it. I'm going to do this again. D to M, let go, right click, and unhide, not hide. And then I'm going to hide the first cell. So I'm going to hide from B, left click on B, all the way to, let's go to E, let go, right click the selected area, and hide. Now I hit unhide, hide. Okay. So now we're going to go to the next one. It's factory rent. Another one we could have. Wherever the factory we have, if we have rent and we do multiple jobs within a factory or within some type of location, then that rent we should be applying to the job in some way, but we have to apply it using some kind of allocation method. So this is going to be on 130. Similar type of journal entry. We're going to debit the factory overhead, and the amount is going to be for the 20,000. 20,000. And the credit is going to go to cash for the 20,000. Same kind of thing. I'm going to go over here and say factory overhead is going to be going back up or more towards zero. F2 plus F2. For the 20,000, the cash, F2 plus F2, is going down. Now note once again that we're not going to be doing anything to the job because we already applied it out to the job using an estimate. Next one, if we go back over, we're going to say then we had the 20,000 there. Now we're on the depreciation. Now if it's depreciation on equipment for the factory, we need to allocate it to the jobs in some way. The normal journal entry for depreciation at the end of the year is to debit depreciation expense, credit accumulated depreciation. This time we're going to be debiting not the expense, but we need to put it into the job. We don't know which job, can't then debit work in process, but must debit the factory overhead. So we're going to put it into factory overhead. The credit this time, however, go into accumulated depreciation. So the bottom half is the same, top half going to factory overhead as opposed to depreciation expense as we would be traditionally used to seeing. That's going to be the 30,000 debit and credit. Factory overhead then, I'm going to say is F2 plus F2, factory overhead, and the accumulated depreciation in 11, which is going to increase the accumulated depreciation, decreasing the book value. So now the factory overhead, we over applied only by 3,000. It's kind of the end of the month. We've allocated all the actual costs to the factory overhead, or we've incurred all the actual costs in the factory overhead, and we have allocated out the cost to the factory overhead, and we've over allocated by 3,000 at this point. Now we're going to say the next item is we're going to say what happens when the job is closed. We're going to say that we closed the job. We haven't yet invoiced the job or shipped the job completely, but the job is now closed. So we're going to say, all right, on 1/31, let's say 1/31, we said that the job is going to be closed, and we're going to transfer it to the finished goods. So in other words, we're saying that these two jobs, now this one already indicates closed, but this one's going to close. So I'm going to say it's not open, now it's closed. So these two jobs are going to be closed. Now when that happens, we've got to move the cost then from work in process, because it's not in work in process anymore, it's now been completed. We're going to move it now to the finished goods. So we got to move it to finished goods. So to do that, we're going to say these jobs currently have a cost of direct materials, labor, and overhead of, if I was to add them all up, the 500,000. So the journal entry is pretty straightforward then. We're just going to say this finished goods account needs to go up, and we're going to reduce the work in process account. So the finished goods is going to go up on the debit side. So we're going to increase finished goods. We're going to take it out of work in process. And it's going to be for the amount of 500,000, which represents the cost of those two jobs. So if we record this, then finished goods is going to be increasing, and the work in process is going to be decreasing. I'm going to say F2 plus F2, and there we go. So now we got to look at the jobs and say, well, how are we going to reflect that on the job? We got to say something like, well, these two jobs are closed, and therefore this work in process account only includes the 260, which is only this one. So to tie these two things out, I can say, well, these two tie out to the finished goods, this and this, add up to 500,000. That ties out to the finished goods, and then the work in process ties out to this job, which is 260. So notice how kind of complicated that is now. Now we've got jobs that are open and closed, and we need to be able to reconcile the job cost sheet to the amount that's going to be on the work in process and the amount that has now been transferred to the finished goods. Okay, so within QuickBooks, we're going to need some kind of mechanism to be able to do that as well. Once we transfer these around, how are we going to be able to adjust our job cost sheet? Because you see here that it took a little bit of adjustment for us to then re-sum up different numbers. And so that manipulation between the open jobs and the closed jobs, we need some kind of mechanism within QuickBooks to do that easily and then tie them out into the related accounts on the trial balance. So next item that we're going to have is that we're going to sell the job. So we're going to sell job number 14. So there's two things that happen on the sales time. One is going to be the sales transaction, and the other is going to be the cost of goods sold. In other words, just like when we sell inventory, we're going to have two things that happen. One, we're going to say that we have the sales price. It's going to be accounts receivable is going to go up because people owe us money, and we've got the sales price. The other that we've been tracking all this time is that the finished goods is going to go down, and we're going to record the related expense, cost of goods sold. This is usually reflected with two journal entries oftentimes so we can see it more easily. We're going to say we made a sale, so accounts receivable is going to go up. And we're going to say that the sales is going to go up, which is an income account. Now, what's going to be the sales price? Well, this over here, that 186 reflects the cost. So how are we going to get to the sales price? It's not here. We could have some kind of system where we're saying, well, the sales price is, we agreed on a 30% markup, let's say. So what I'm going to do is take that and increase it by 30% and say that's the sales price. So you can imagine then the invoice that we would have that we're going to want to set up in QuickBooks that might say, hey, look, there's the direct materials, there's the direct labor, there's the overhead that we applied to the job. Our markup is 30%, which is 186,000, the cost of the job times 0.3 or 30%. That's 55,800 plus the job itself, 186,000, the cost of it. The total then amount is that 241,000. So that's how we might come up with the sales price. So so you can see, how are we going to do that in QuickBooks then? We want to be able to create an invoice. We need some mechanism within QuickBooks that will create an invoice, possibly laying out the three items, the direct materials, labor, and overhead that have been incurred, as well as the markup that will be incurred, and possibly more detail than that, giving us detail about the kind of direct materials, the kind of direct labor, the kind of overhead, rather than just kind of these summary categories. So then we're going to say, all right, this is going to be equal to this amount times the 1.3, 130%. That's the debit and credit. So that's going to be the sales half of things. I'm going to record this. The accounts receivable is then going to go up, and the sales down here are going to go up, and that's increasing net income. This is a credit here. This is really income, not a loss. Then we're going to have to record the cost of goods sold side, the cost of what we're giving up, or the job that we have been working. And then what's going to go down is the accumulation of all the expenses we put into, in essence, the inventory account, which is now the finished goods inventory. The cost is going to be coming directly from our job cost sheet, which is going to be that 186,000. So there's the cost, there's the debit and credit. So if we post this out, we're going to say we have the cost of goods sold, the 186, and the finished goods is now going to be going down. I'm going to say F2 plus F2. Finished goods is going down to 314,000. So 314,000 in there. We have to then reflect this on our job cost sheet now. So if I go back over here, we're going to say, well, this one's now closed and it's shipped, let's say. So what's still in work in process? This amount's still in work in process. That's going to be the 260. This amount is now in finished goods. It's closed but not shipped. And that's going to be for the 314. So there's the 314 in the finished goods. And so now you can see what we have to do with the job cost sheet. We kind of got to indicate the amounts that are open, the amounts that are closed, so that we can tie them out to the worksheet over here. Now, as long as we can tie them out, then we can make any type of adjustment we might need to do. So at the end of the year, again, we might need some different type of basis than this at the end of the year. We might need a percentage of completion, a completed contract method. We may need some kind of tax method that's going to be different. As long as we can tie out the job cost sheets like this, that should be supporting the appropriate general ledger account, then we should be able to make any adjustments that are necessary to put us on whatever basis that's going to be necessary.